Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. You're with Halftime Report. I'm Samira Abdi and with me is Nigel D'Souza. Hi, Nigel. Good afternoon. And, for our own markets, we seem to have come off actually quite a bit. So we're trading near the lows of the day and, in fact, close to that 10,300 odd mark. And it's not just the frontline indices, it's across the board, actually. So whether it's the mid-cap index, you pull that up. At one point, we thought that it was running away to a 1% gain. But that, too, is just about trending marginally in the green. And all of these energy, banking stocks, all of them which were having a very, very strong day of trade, are all now fizzling out.
Absolutely, Sumera, and I think at around that 10:45 a.m. our time, at that point of time, the Nikkei suddenly did fall off the cliff. That was sitting with good gains in morning trade. Remember, it was up more than 1.5%. That corrected closer around 500 points from the high point of the day. So you should pull up the intraday chart. You'll see, well, the Nikkei is down only around 45 points. I'll tell you what, it was up closer around 400 points at one point of time. So you pull up the intraday chart on the Nikkei. That's the one that really, made our markets as well quite nervous. And that one, in fact, did correct a goodish bit. At some point of time, I think the director will get that one as well up for you in the screen. There it is. That's the one, in fact, that saw a sharp correction. And after that, we got a little bit nervous. But we'll talk more about a whole host of stocks. We'll pull in a couple of managements as well. First up, we're running through all the top stories. It's a quiet day of trade on Dalal Street. Key indices, they clock in minor gains. The mid-caps to come off the day's high to trade near the flat line.
FMCG, sanitary ware and paint stocks all gain in hopes that the GST Council will consider reducing the 28% tax bracket at the two-day GST meet that begins in Guwahati today.
And Petronet LNG gains as sales and margins beat estimates in the second quarter. Cadila, though, is under pressure on a Credit Suisse downgrade due to competition fears for its drug, Lilda.
Tata Motors trades higher ahead of their second quarter numbers today. The street is keenly watching JLR margins, which are expected to come in at 10.7%. All right, those are the top stories. It's time now for movers and shakers. So let's tell you about all the stocks which are buzzing in trade. Petronet LNG, what a strong quarter for that one. And Varinder is here to break it up for us.
Like you rightly said, very, very strong quarter coming in from this company. As a lot of people have been telling us, and Nivesh, has attended a lot of conferences where the thing was that if you're playing a sector for the future, it is gas. Gas is one theme, for the next 4-5 years, and Petronet LNG, the volume surprised a lot of people. 15% volume coming in this quarter versus expectation of only 1%. So clearly very, very strong set of numbers. Look at anything, whether it was income, which came at 7,700 crores, which was nearly 1,000 crore beat in terms of what the street was expecting. EBITDA 900 crores, nearly 150 crores beat, which was coming in. And also profit, which was nearly 600 crores versus the expectation was only 460 crores. So everything went well for this company. Why was that? Clearly because there was the reason why the volumes were so strong, because the higher long cargoes of nearly 134 units, which includes the Gorgon, came into this quarter. Also, the management sounded very, very confident. I was hearing the press conference. Also, the thing with the Petronet is that you are currently seeing one of the units, having Dahej having 110% utilization, which was expected, but Kochi is now ramping up. It gave a utilization of nearly 15% this time, and which is which is another kicker going ahead for this company. So considering everything, almost all the analysts on the street are bullish. Kotak has written on it. They mentioned that they will be upgrading their EPS for 2020 and even further on this company. Is not surprised why the stock is up 5% today.
Okay, all right, Varinder, thanks so much for that. Well, I'm looking at Lumax in today's trading session, but if you just pull up a last 2-month chart of Lumax, you'll see that in September, the stock, in I think September 25th odd, the stock went all the way down to around 1,200 rupees. So you just pull up a last couple of month chart, you'll see that in fact the stock has already had a good run from those lows that we saw in September. Today, why is the stock higher? Well, Edelweiss Investment, they came out with a note on Lumax. They're quite positive. They've initiated a buy rating on the stock. They have a target price of more than 2,500 rupees. They're saying that the company has been focusing on cost reduction and it's also been focusing on profitability. Remember, at around 2,560, they are saying that in fact it'll trade at roughly around 18 times its forward earnings. They are saying that in fact, the LED bulbs, that's a big positive over there. That's a step in the right direction. And the use of LED bulbs has increased. That is nearly around 4 times the cost of a normal bulb. And that is contributing close to around 5% in FY17. They're expecting that to go up to around 40%. So that's the reasoning that they're giving. They're also saying the number of rejections has gone down from around 5-6%. It's gone down to around 2%. And in the next couple of years, they expect that rejection rate to come down to around 1%. They're looking at margin improvement of 200 basis points, profitability as well moving higher. And on the back of that, remember, this is the proxy play to Maruti. The stock, remember, in the morning was up closer towards 2,000 rupees. It's corrected actually closer on 100 rupees from the top.
All right, the other one that we want to talk about is Cadila. The stock is a bit under pressure, and Ekta will tell us why. Ekta.
Well, Credit Suisse has in fact downgraded Cadila to neutral today. They've cut the FY19-20 EPS by 3% and 10% respectively on account of more competition that they envisage for Lialda generic, which is basically an ulcerative colitis drug. They've also cut the target price to 465. According to them, FY20 profits are expected to be flattish because of faster competition which is expected for Lialda generic. Teva, for example, has received tentative approval for Lialda generic, and that was sooner than expected. So that's the reason why, because remember that Cadila has exclusivity on this particular drug up till Jan of 2018. And hence, post that, there was lesser competition expected. Now, because Teva has also received tentative approval, we can see more competition than what was anticipated, and hence earnings projection is coming down according to analysts.
Okay, all right. Ekta, thanks so much for that. Well, Gujarat Alkalis, in fact, posted a good set of earnings in the second quarter as higher caustic soda prices aided margins and revenue growth was strong. We spoke with the management earlier today. Let's hear out what they had to say.
The current price of caustic soda is ranging, you can't give a precise amount, from 38 to 40, and it is talked about the flakes are being at 42. And the margins are in the range of 20%.
And Make Money Organics, that company has seen good growth across all segments this quarter. We caught up with Kushal Suparkar, the MD, to talk about how the performance has been and what's the outlook, especially in terms of their expansion plans.
In basic chemicals, we have already announced 3 projects. We are coming with the chloromethanes. We are doing the expansion of caustic soda plant with the captive power plant, and we are also coming up with the hydrogen peroxide plant. We are seeing the quarter 3 is also doing nicely. So we believe that these numbers will remain intact for rest of the year. We are targeting our best that we should maintain EBITDA minimum 20%, combining all 3 segments, and our PAT should remain minimum between 8.5 to 9%.
Let's straight to chatting with our next company. We're talking about Tri-Generals and Focus. The company posted a rather subdued set of numbers, bit of a degrowth on the top line on a sequential basis. Margins as well were under some pressure. But let's understand what the second half of the year does hold for them. We are joined by Mr. Ganapathy, the Chairman and Executive Director of the company. Hi, Mr. Ganapathy. Thanks so much, sir, for joining in today. Well, things not looking that great in the first half of the year. What is the second half outlook really? And if you could help us out, sir, about where is your key focus area? I remember earlier you used to do around 90% of your revenues used to come in dollars. Are you changing that focus? Go ahead, Mr. Ganapathy.
Of growth will come through partnerships and collaborations, and in India. And we now have an order booking of nearly 220 crores in India, and with a potential for about closing the year with order booking of 270 crores. That apart, we are not factoring the hot pursuit of about 600 crores. And these are coming across new verticals in India. We are, through partnership and collaboration, our pivot to growth will be through e-learning, as reflected by the win in Andhra Pradesh for about 160 crores a few days ago. And we have some strong bids in live bids in the space of smart cities. And we are one of the bidders in Belgavi, for example, and there are others in the pipeline as well. So that apart, our managed services business has grown very significantly. And we have order booking in that alone to the extent of
Mr. Ganapathy, Mr. Ganapathy, I was just taking a look at your numbers for the first half of the year. There's been a bit of a degrowth, right? You've done around 330 crores. Now you're saying that the order book, etc., is all picking up. For the year, what kind of a revenue number can you give us? And I'm looking at your margins as well. They're seeing some compression. What kind of a margin, blended margin, can we look at for FY18, the remainder of it?
See, I see, if you really analyze our past few years, of our revenues, 95% of it has come from US, and then we've had a net, EBITDA has always been about 6-8% or whatever. But the high margin businesses for us are coming in the space of managed services and e-learning projects. But not to forget the fact that our stress in the second quarter will get neutralized because of unusual expenses that came out of our renovation. So these are all one-time costs that have been built up. But more importantly, one of the significant things that happened in the quarter that has gone by has been the NCLT has agreed to a capital reduction. This is a big thing for the shareholders, because if they do feel they are now in a position to be permitted to declare a dividend going forward. And I think we will close FY18 as planned, if not more. I think we see a robust end to an FY18 and even better FY19, because our target for we are well and truly on course for what we have set for ourselves for 2020. We don't give guidance, but we'll be better than whatever we have internally, and these are good margin businesses that we are picking up in India.
Mr. Ganpati, that's nice to hear. I take your point that you don't want to give a guidance, but at least for 2020, the target that you're mentioning, could you outline or give us a ballpark figure of what that might look like?
See, we have set for ourselves a very ambitious growth, but then, I've always believed in the old Robert Browning quote, if man's reach must exceed his grasp, for us, what's a heaven for? So we set ourselves out to cross at least $200 million. Okay.
So are you also adding newer clients?
Yeah, see, everywhere we are acquiring new clients. India, our order book, if you went back 3 years ago, was abysmal. We were doing a few lakhs. Today, I will close FY18 in multiple crores, at least about, as I said, the order booking itself is about 220 crores. And revenue recognitions will happen. It has started to happen. In fact, this increased revenue recognition from India will be reflected in Q3 when we come back to you. FY18 will be better than FY17. Excepting that, in fact, if you analyze, quarter two for Trigen has always been seasonally weak quarters, historically. Right. And we do the strong pickup and the heavy lifting happens in the third and the fourth quarter for us. And that pattern is going to get better than the best years that we've had in Q3 and Q4 because of the India business. And some of these businesses have to be closed. They are government businesses, they have timelines, so the revenue recognition will happen.
Correct. Mr. Ganpati, looking at the first half of the year, the second half, you'll really have to do a lot of heavy lifting, actually, as you said. You're talking about 200 million by 2020?
No, wait a minute. 200 million by 2021.
2021. Absolutely. And currently you're at what, around 100 million?
We are about 108. 108 million. Run rate. But as I said, it is achievable because, one important market Trigen had neglected was India. And we have a big IBU team set up in Chennai. And they are focusing on 4-5 verticals. And we have...
how much of money, sir? Mr. Ganpati, we're running a little short on time. How much of money comes in from India today? As of now, and are you looking to change that mix?
If you look at FY17, it was a few crores.
Right.
Okay. It was very insignificant, almost to the extent of laughable. But I think all that is changing now. While we will grow the US business, non-India business at the same rate at which the company has grown, the India business will contribute to the heavy lifting, and better margin businesses will come from India.
Okay. All right, Mr. Ganpati. Good to hear the management sounding bullish. And in fact, a lot of the companies, it seems, are now refocusing on the India business once again. So let's see how things shape up in the rest of FY18 and FY19. Almost the fag end of the earnings season, but a lot of biggies are still awaited. Today, the big one will be Tata Motors. We'll be watching out for numbers there. Naveen is here to run us through the quick expectations. Naveen.
So quite a smooth ride is what we are expecting, Sumaira, for Tata Motors. Remember, quarter one was a very dismal quarter, the biggest fall seen in the JLR margin, 7.9%. But in this quarter, I'll begin with the consolidated numbers. Yeah, overall numbers, revenue are expected to be up by close to 5% at around 69,000 crore. Also the EBITDA margin, so here we are expecting an EBITDA margin of 10.4% versus 9.5% for two key reasons. Both they are consolidated, both their JLR as well as standalone business. Over there we are seeing some positive traction. One key reason, standalone business, remember the volumes have been inching up. On the other hand, JLR front, the JLR margins are expected to improve. Now coming on to the biggest number, that is the JLR margins, we are expecting a margin of close to 10.7% versus 10.3% year on year, and quarter on quarter it's 7.9%. Why? Remember, but one key thing will be the dark horse in this will be the forex element. Last time the forex losses were really high, almost close to 650 million. That is one reason why we had seen the margins for JLR plummeting, but this time that is one number which the street will be keenly watching. Apart from that, standalone numbers, not very important. 10% of the overall EBITDA is standalone, but still, nevertheless, over there we are expecting the losses to reduce from close to 660 crore to around 400 crore. Overall, valuation wise also it looks cheap, hasn't run up much from quarter 1 to now. It's run up what, 20-24%. Still we are expecting a steady quarter for Tata Motors. Back to you.
Okay, Naveen, thanks so much for that. Well, it's been a smooth ride. You're talking about horses, so it's going to be an interesting set of numbers that will be coming in today. And just looking at yesterday's volumes as well, I think we'll be in for a bit of a volatile move even post the results. Currently it's moved to the low point of the day, but that's been the case with the entire markets as well. As promised, let's get in Ashwini Gujral as well as Rajat Bose. Ashwini, coming across to you first. Well, we have corrected a goodish bit from the high point of the day. Are we looking weak enough to go ahead and short this market, or are you expecting the second half of trade to be better?
See, we opened higher and we've now broken yesterday's low on the Nifty. I would think yesterday's rally has probably failed, and still a good time to go short because we are only at midday. So there are about 2.5 hours left, and the way momentum is picking up on the downside, you could have a fairly ugly second half. So now it seems likely that we will go towards 10,200 thereabouts. So that way I think short positions even assumed right now could work out by the end of the day. As far as individual stocks are concerned, MGL is a sell with a stop of 1200, target of 1120. United Breweries a sell with a stop of 1120, target of 1060. And Serra Sanitary is a buy with a stop of 3350, target of 3500.
Hi Rajat, good afternoon. What are your stock calls now?
I have 2 buy calls and 1 sell call in the futures segment. Bharti Infratel, I'm expecting it to move up. It's in a pullback rally, and the pullback rally could extend up to say 450-51 kind of levels. 447 to about 451 is the target for this pullback rally, and 434.80 should be your stop loss. And Dewan Housing Finance, this is actually a spillover call from the morning calls. The stop loss I maintain at the same level, 633. It's a 2-day trade, target 660 to about 669. And finally, L&T Finance Holdings is a sell. It's a stop loss be placed above 193. I earlier gave targets of 184 and 181. Now I would like to extend the target on the downside to about 177.
Okay, all right, Rajat, thanks so much for that. Ashwini, I wanted to ask you about some of these pharma stocks. Let's pull up the Sensex first. That's down close to around 100 points. So from the highs of the day, that's corrected more than 250 points. The intraday chart should come up for you on the screen. And the pharma index as well is taking a bit of a knock in the last few minutes. So let's pull up the pharma index on the whole. Oro Pharma, Sun Pharma, they're taking a sharp knock. Ashwini, any of these pharma names, are they back on the selling list? Would you look to short any of them? All of them have moved to the low point of the day.
See, basically the entire market is coming under pressure, so I don't think people are going to differentiate between pharma or other stocks. I think anything that's rallied in the last few days, including pharma, is going to come under pressure. Even gas stocks, which are apparently in a bull market, they are coming off. So it's basically an across-the-board type of sell-off, which is only gathering momentum.
All right, gentlemen, thanks very much for your trades this afternoon. Let's just quickly take stock of what's happening on the screen because even the Nifty Bank, it appears now, is about to break into the red anytime now. 0.25% down on the frontline indices, and like Nigel mentioned, the biggest casualties coming in from the pharma space. Other than that, you know, even look at something like an SBI. That stock has moved into the red now. Reliance, though, is still holding out, although it's off of the high and quite significantly so. Bajaj Finance is another one, I think about 1.5% down. And even something like Indiabulls Housing Finance, that was having quite a good day, actually. But look at the way that stock is coming off. On the upside, not a lot of action happening. Say some select stocks holding out into the green for now. Bajaj Auto amongst them, about 0.5% higher on that one, and seeing just a tad bit of an uptick. But anything else from the broader market?
You know, Sumaira, we're talking about the frontliners. Take a look at Ashok Leyland. That one has taken a sharp knock in the last few minutes. Reliance Communications as well has got knocked back, and not a good day for pharma. So Biocon as well is taking a bit of a knock.
All right, let's address some more numbers then. Petron and LNG came out with a very strong set of numbers. In fact, the stock is up about 4% now. And the management says that they are very confident of maintaining their volume growth, and they remain optimistic about the Kochi terminal.